Hey traders, it's Christopher Mullen from thetechnicaltraders.com. I want to walk through a chart that a trade that we took and how it unfolded, and along with kind of the outcome that came into play. Now, yesterday we got out of a natural gas trade, and I kind of want to walk through more or less how we entered it, why we entered it, and what happened in the charts, and kind of just recap on the trade. So hopefully you guys can get some insight into kind of what's going on, why we do what we do, and how we need to protect our capital. So more or less, this is the natural gas daily chart. This goes from December of last year. So now we've got the early part of this year. More or less, we've been waiting for a bottom to form in natural gas for a really long time. And it started to show volatility back in these days over here. And we were going, okay, well, this is increased volatility. We should start to see a bottom form. And eventually it started to form this rounding formation. And of course, it created this resistance area right across here. And once we started to see a series of higher lows, we started to see a series of higher highs, that's when we wanted to start to get involved. It was in the final stages of a basing formation, and it looked like the momentum had shifted to the upside, ready to move. And we ended up getting a buy signal in the market right down over here. The market moved super fast that day. We ended up getting in by the time everything got posted. We got in over here, and we caught this beautiful move all the way up, and it hit our first target right at the highs of the day. And we got 11% gain on that trade. We were only in it for 1, 2, 3, 4, 5, 6, 7 days before we hit our first target. We had this breakout of this bottoming formation, and there's potential for a lot higher prices yet. But overall, we have to make sure we protect our capital. And as soon as we hit our first profit target, we always move our stop back to break even on the price, because we don't want to turn a winning trade into a losing trade. Now, one of the ways we came into this was we started to see a rounding formation form. Momentum was shifting to the upside with an uptrend. And if we throw on a couple other layers here of analysis, let's throw on our cycle analysis. And more or less, we are pointing to, our cycle was pointing to higher lows and higher highs. It was pointing to a nice move. Now, this is our cycle system, which takes the most active cycles over the last year, blends them together, and then it gives us overall cycles. So if you're to look at this, it's kind of an ugly chart on natural gas, but more or less there would have been some type of cycle here, a longer term wavelength cycle like this going in play. And then of course there's a whole bunch of smaller cycles that oscillate through there. And of course, when you blend them all together, you get this blue line. So when you've got a big long-term cycle cycling down, it's going to naturally pull the price down longer, and there'll be counter-trend rallies and there are smaller cycles within there. Now, more or less, we can see into the future what the bias is for natural gas. And we saw that price was going to move higher. We had our first target there. We got in on this play, on this low, and the market washed out, and we saw the first wave rally to the upside. I was really hoping we're going to see this extend and really pick up speed and go up here, and it still may. Keep in mind, this market is channeling. We are making a series of higher lows and higher highs. This could very easily continue to pick up speed and blow off over the next week or two, or a few weeks, and then eventually it could come all the way back down. But more or less, we caught 11% move, got out of the play as it started to sell back down, and we're going to look for a new re-entry. And take a look at this chart here of, this is natural gas continuous contract seasonality chart. So this is telling us, on average, what does the price of natural gas do? And of course, the time frame on the chart we're looking at is that December, January, February, March, right where we are. It's showing that we should have a series of highs. It's naturally a time of the year where it kind of actually builds a bit of a platform and does move. It does trend higher more or less from January up. And it actually shows that we could have a little bit of a blow off here late in May or mid-June, and we could go up and hit that green upside target. And then, of course, natural gas typically falls out of favor. We're into the summer months, and who needs to heat their house in the summer? So that's kind of where we are. The chart has been showing this seasonality-wise is right on cue. Hopefully we get a re-entry in natural gas and play potentially this push up to that green resistance line on the chart. Take a look here. If we can get some traction, we do have cycles going against here. So more or less, we could see the market continue to chatter and potentially be out of favor here for a little while. until the cycle puts in a low, and then maybe we see it start to ramp up and pick up speed going into June, and then it could top out from there. But that's where we are. It's all about finding these opportunities where we can get in low, catch a cycle, catch a move. And we had a pop and a break, and a nice 11% gain in only a few trading sessions. And then if it doesn't continue to go higher right away, we get out to protect our gain. And natural gas, the UNG ETF that we traded here, it's really tough to trade natural gas. Simply, and a lot of other commodities for that matter, just because of contango. But more or less, when we got in right about here, the market popped up, came up, it hit our target, we got out, and then the market came all the way back down, and it actually came back and triggered our entry price stop. So we got out half of our position at 11%, the other half at 0, gives us a net 5% gain in only about a week. And we move and we live forward another day. Now it's got a series of potentially higher lows here. This could start to continue to build up base. You can see the natural gas ETF doesn't have the same pattern. It hasn't broken out of more or less this resistance area so much. I mean, it did have a pop, but overall it does trade a little bit different, and that's why I always try to mimic and follow what the commodity is doing. I usually follow gold. I follow gold futures, natural gas futures, oil futures, the SP 500 futures, because they're the real data points, not the ETFs. It's really hard to chart off ETFs, so be cautious if you do that. Anyways, hopefully that gives you some insight. We're looking for some fresh new trades. We're in a trade that's moving up nicely already, and hopefully we'll get some more in here as they unfold. Take care. Bye-bye.